Welcome everyone to the Kendall Report. Yeah, somebody said double feature. Yeah, I released a video on some ideas that I am working on. There's another video coming out soon that will be about the 10 highly correlated stocks to trade this range with, and we'll be able to trade them from both sides. Probably a lot of option type strategies starting to come into play. Anyway, welcome. Sunday night, here we are, getting ready for another week. Futures are trying to sell off a little bit, down 14 handles right now. So we're really just kind of waffling around here. We did see a decent sell-off late in the day. There was some big orders that came in late in the day. I was out of town for Friday session, so I was able to review it just looking at charts. So I didn't actually get to watch the action, but it was a very interesting day to say the least. And so, yeah, just a reminder for everyone, I will have the trading room live, so overnight. So if you folks want to trade overnight, if you're in our live trading room, you'll have access to the trading platform level 2, so you'll be able to see the stuff I've been teaching you and use it. So enjoy that. I'll make sure that's done shortly after this broadcast finishes tonight. So anyway, I want to talk about a couple things. And the big thing that's happening this week is CPI is coming out. And you don't hear the transitory talks anymore. You don't hear the things that everybody are talking about from the standpoint of what the markets are thinking. No one's thinking about it anymore. It's almost like they're trying to ignore that it's happening. We did see a bit of a surge in the 10-year right on Friday. Yield curve flattened again, all kinds of stuff to cover tonight. Mostly more of the same type of activity, and I just think we're going to see a little bit of retracement today. Looks like, not because we're down right now. I'll lay out the numbers here in the technicals. There are some really solid numbers underneath this market that I believe will hold, but they're about 120 points lower than where we are right now. So I'm just kind of looking around at my notes for tonight's broadcast, and just before we get into much of anything here, last week we were up, S&P was up 1.5, NASDAQ up 2.4, Russell up 1.7. That sounds pretty good, but S&P for the year to date, we're down 3.4, NAS is down 9.9%, and the Russell down 10.8. So still a pretty rough start. The S&P has enough diversity in that it's not getting as hit as bad as you're seeing in more concentrated from the standpoint at least where the selling's been coming in on NASDAQ and the Russell. They just can't get out of their own ways. There was also 8 of the 11 sectors were higher, but guess who was winning again? Energy up 4.9. Financial up 3.5. Those two sectors have carried the market for over a year. There's other things been in play, but energy has been a big play. It goes all the way back to, I remember telling you folks that you need to focus on energy and financial back in November and December of 2020. So we went through a whole year. Now we're in February already of 2022, and we're starting to still see that type of activity where those sectors are still moving. Of course, we saw crude oil right now is at 92, but we printed up at 93. I've been talking about 95 to 100. We'll go through all the details here, but it just looks to me that we're going to continue higher overall, possibly well over 102 on crude oil. So it's going to get interesting there. They're trying to make it worthwhile to buy a Tesla. Problem is you can't make enough batteries, so that's kind of a moot point. Let's talk a little bit about a couple things that are, like I said, CPI is the big focus this week, expected to be up 0.5 month over month. We'll see how that comes in. If it comes in hotter, that's not until Thursday. So we've got kind of a market that we're going to trade on market sentiment, whatever that is. I think you can flip a coin to figure out what that looks like. On Monday, we got consumer credit, no big deal. No one really cares for the most part. It's not until, like I said, Tuesday and Wednesday, there's pretty much nothing coming out. So Thursday, we got claims 228 coming out, the continuing at 1.628. And those, just a quick mention of the unemployment numbers last week were pretty insane. You almost wonder, if the books are being cooked again. We've seen this before, and I mean those are just way off the map. That the folks that are following this stuff are missing it by that much, right? Usually they're reasonably close, but that was a big blowout number, and you got to wonder just what's going on here, right? So on Friday, I guess just to finish off these economic stuff here, Friday we've got U of M, University of Michigan, consumer sentiment. It's sort of watched pretty close. Came in at 67 last month. I think they're looking for it to be about the same on change as what I've been able to find. And of course, we still have earnings coming out. So this week, in my opinion, is going to be pretty much CPI and earnings. And earnings are very mixed. We've got, I didn't total them, but 49 coming out on Monday, mostly finance and pharma. Same thing on Tuesday, 184 reports. You got BABA coming out, then you got Pfizer, more pharma, kind of mixed with a lot of financial institutions and banks and those type of things. Thursday, 202, Coca-Cola, Pepsi, pharma, and banks again. And then Friday was just a complete dud. There's nothing that I don't think anyone's really going to care about. And we saw so many big numbers last week with Facebook blowing up and then seeing Google get a one-time bid. Amazon get the one-time bid out of that purchase that they made. So that was kind of a bogus report. And I think maybe that's what came into play as we came into the end of the week, is that folks were just not really that excited about the markets and owning the market. So as I'm talking here, we're down 19 handles now. So we're trading down. We'll get through the technicals here in a minute. let's go ahead and get into the zoom in, and let's get to the numbers here as far as the database goes. So we're still hanging around 28% right now, bullish. This is the daily that's up there right now. We got 1,821 buys, 548 sells, so we had a slight positive. When we look at the optimized viewpoint, it's pretty neutral. The 1.2 models are a bit more aggressive in coming on, but we are seeing it go up to about 4,500 symbols. We were down to 2,800. I don't recall the exact number. We're down there. As far as the weekly goes, we're looking here at 16.45, so we actually upticked a little bit. We got 595 buys versus 218 sells. So we were at 15 and change, just no traction coming back in here on the intermediate. I just don't see that being something that's going to be material for a while. We've got a lot of work to do in this market. It's got pretty broken in that sell-off down to that 42.22. That was a big number, and just a lot of stocks have rolled over. So it's very difficult to try to get some kind of flip and a turn. And that's why I think we're going to be locked into this trading range that I did in my video that I released earlier. So if you haven't seen that, I'm not going to talk a lot about that since I did a 11-minute video on it. Just watch that. I'm going to be bringing that into focus after everybody gets a good chance to watch that video, and we'll talk about that as we go through the week. Let's go ahead and get into the technical viewpoint here. What's going on? We've got the S&P, like I said, down 18 handles right now. I'll take a quick look at the market grid here. The grid for today, we're trading down at 44.73. That's S1. I would look for a continued type of volatility to the downside, primarily because we still have the 21 period moving average moving down at 0.20 on ppm2. ppm1 is positive, so what we usually get is a sandwich between the 10 and 21 in this scenario. So 44.48 is where the 10 period moving average is. That would be close to about an S2. So maybe R1 S2 today would be what my expectations is from that standpoint. ppm1, like I said, moved up pretty good, but it's starting to move back, and we're seeing the ppm2 and 3 starting to stall a little bit, just really setting up this trading range. There's a pivot number down here. You'll see this on the screen, 4358.46. That is, I mentioned this the other day, this is the drop dead number. We take that out, then we're probably going to challenge the lows, and I wasted my time today making that video. But even if we did take out that number, 42.22 is the cash low. On the futures here, that low was 42.12. So if we did take out that number, that just represents a retest of those lows. I think if we got down that far, especially if it went quickly there, we're likely to get a decent bounce from those levels. So I'm not expecting that decline below there. I do think we'll hold. The 200-day is right here, 44.29, 44, we'll call it 44.33 for the S3 today. Those are all should be substantial support numbers as we go forward. Let's go ahead and go over to SPX. SPX, same scenario. We're sandwiched between 10.21, 44.50, 45.38 is that number. We look at the the grid numbers for today: R1 4517, S2 4465. That would be down about 40 handles to get there. And it's very likely we're going to continue to see a kicked up volatility, even though the last couple of days we've contracted the ranges just a bit. So we're starting to see the market grid kind of come in just a touch here. Let's go over to the weeklies and just kind of look at what the expectations for the weekly is. And you'll see still pretty decent expectation here. Looking at R1 4551, R2 4608, and R3 4665. So when you watch that video I put out earlier, that's the upper end at R3 on a weekly is the upper end of this trading band that I think we're going to be stuck into, and we're going to remain between the 48.18 and the 42.22 levels, and we're likely to just continue to just waffle in here. Now, one of the things that is happening that is reasonably positive on the PPMs on the weekly here, we are seeing them turn up, but we're still, PPM 1 is still in a trend phase. 4603 should be capped anything that rallies up there. And like I said, we're probably looking at this week probably a 40, I'm going to go with a 45.51 and R1 to a possibility of S1 44.49. That's where everything lines up. So we could get a narrow range this week. Like I said, there's not a lot of news coming out except for the CPI. If that kicks up a little bit, then look to a possibility of getting down to, S2 43.92. And if you notice, S3 on there is 43.35, which would represent that pivot area down that I just mentioned a few minutes ago. Going through the NASDAQ, we'll start with the weekly here and we'll work our way back. The NASDAQ is still very weak. We have a minus 0.72 PPM1, and this is weekly on the intermediate trends. PPM2 is minus 0.22 and a positive PPM3. All that's happening here is the moving averages are rolling over, starting to suggest that we're going to potentially retest the lows here. The NASDAQ could pull everything down. It's been kind of the leader from the standpoint of what we've seen. We did get that STX buy signal a couple of weeks ago, so we are basically out of the influence. Usually we'll get 2 weeks sideways. That's what we already had. So we're into the third week now, and it's just going to be interesting to watch and see how these ranges set up. But just like in the S&P, basically R1, S2 would be 14,171. Let's go over to the daily. Daily, same thing here. We've got a positive 10 and a negative 21, which is PPM 1 and 2. So just look to stay between those ranges right now on the daily. Right now, S1 14,582. We printed 14,602. The high 14,717. That would put us at 14,788. Be pretty tight, but I would look to the potential if we get through that 10-period moving average 14,552 to go down to an S2 14,466 could be a number that you want to watch at on the downside. It looks like there's some weakness just rolling into the PPM3, and the only positive we have here is that PPM2 is crossing its second derivative, so it may set up just a broad range kind of working within this market grid range. It's pretty wide range, 15,122 to 14,248, basically a 1,000-point range between the upper boundary and the downward boundary. So we typically will trade in the S2, R2 range, depending on how this thing pivots out as we go forward. Let's go to Russell Cash. just going to go, it's interesting that we're getting some Fibonacci projections to the upside here, which is somewhat encouraging. PPM1 looks really good here. PPM2 is turning up. So there's a shot here. I'm going to draw something in very quickly that I want you to look at, and maybe, just maybe, we can get some positive range here where we get this little right shoulder setting up right here. And these calculations right here are coming from this. We talk about this in the trading room. This is the length of one. This is the correction. Then the length of this wave here will be equal or a ratio. And these are Fibonacci ratios of that pattern, which is automatically being picked up through the indicator that I built many years ago. So what we're seeing here is just the potential for that, and especially with PPM1 turning up like this. It's not overly bullish yet, but this is a sign that if we can get through the 2068, which is a 21 period moving average, that we're going to have a good chance at seeing some upside. And maybe that's what we'll need to try to get some more stability in the markets from the standpoint of overall market sentiment as we go through this week. So maybe, just maybe, we get the NASDAQ, the Russell, to actually lead the way off the low. So that'll be what we'll be watching for. But that's a very positive pattern. Somebody might even call for a head and shoulders pattern there. I've always argued that there's been two head and shoulders patterns in my lifetime. I don't really look at that kind of stuff, but the way things are setting up is pretty good. You'd get about the same projection if you did the old cup and handle, right shoulder projection, all that. You're going to come up with that number, and that's what these calculations are already doing from a Fibonacci standpoint. So this is a nice setup looking. I just want to go over to the weekly for a minute here. Weekly is going to have a lot of resistance right at 2133, and that's going to probably be a lock. And then above that, major resistance 2220, rounding off some numbers, 2235. In that range is major resistance. So we might be able to get something going. The PPMs are still very negative on the weekly. So my guess is that we're going to stall between 2080, 2133. And that pattern, that's still a positive pattern when we look at the dailies. So since I'm already on screen here, for the rest of this presentation, we're going to do the 10-year and the typical crude oil, gold, and Bitcoin. So let's go ahead and get through this. And so it's dinner time for me, so I'm trying to get there. So the 10-year is becoming very interesting. This is the weekly pattern. I've been talking about this 190 projection and 191, so we printed through that. The next level of expectations now is 212 and 2.25. So we're looking at these upward Fibonacci bands here. The PPMs are really powerful. 2.84, 1.82, and 0.50. So we've got major resistance overhead for the bonds and support for yields continuing to go higher. So whether or not this finally folks start to focus on the 10-year with the inflation, all that, maybe that's coming into play. But this is a very robust, very bullish chart, very low downside potential here. The number that I talked about, we went sideways for 4 weeks, was right along the 200-week moving average, 1.77. So that's going to be your floor, and that's a long ways, almost 20 basis points below where we are right at this moment. Let's go ahead and take a look at the yield curve. I've got the daily yield curve up here. Just continues to work its way lower. It's interesting that the financial institutions are doing as good as they are, considering the yield curve, but there's some other things that are going on inside the banking system right now that are keeping a bid, primarily just because folks are starting to still build expectations into higher yields equating into better profits for the banks. And that may be the case. I've seen arguments out there that this yield curve isn't as important as it used to be. It still is. It just sometimes there's a lag. Right now, I always say the markets can't chew gum and walk at the same time. They're not looking focused on this. And even the Fed is trying to act like they don't even look at it. And I believe they've always been a manipulator of the yield curve. But this is important for banking liquidity and other issues. So my number I'm watching, I keep telling you about it, is 0.22. It's at 0.44 right now, almost at the lows for this particular run. Okay, let's go to crude oil here. Here's these upward Fibonacci projections. 95.50 was the number. We printed so far 93.17. We're back at 91, so pulling back a little bit. It's possible for us just to get into a little bit of a hesitation here and trade between in the market grid. This week we've got a market grid probably S2 and R1. We basically have printed, not quite printed R1, which is 93.74. So if we look at this number here, we're likely just to stay in that range, probably extreme S2, R2 if we get volatile here. But the PPMs, everything is very positive. We got a nice upslope. And like I said, maybe a couple weeks of sideways trading within this range, probably staying below 95 and above 89.30. That should be the expectations for this week. My good friend gold continues to hang on by its teeth. We're looking at right into the resistance at 1812. We've had a high overnight of 1816. And we just need to get above these numbers and stay there. The encouraging fact is that PPM 1 and 2 have turned back up. PPM 3 is still struggling, but that's typical with the longer moving average that we're looking at here from that standpoint. I still like this chart overall, but it's going to take some further patience to realize what gold's potential is. And I still think it will ultimately do quite well. This chart here, I went to the monthly or the secular trends. We do have some upward objectives. 1838, we got up to that number, above that number a couple of weeks ago. We got up to 1856 and then got hammered back down below 1800. So we're just continuing to stay in this range. And when you look at the market grid for this week, it's just got a really good setup for the potential for us to get above the 1818 R1, maybe print an R2, 1842 S1, 1774. This is monthly numbers, right? So this number still looks like a pretty good probability to hit for the month of February. Final market that we'll do tonight is Bitcoin. I've been talking about the stability in Bitcoin. We printed down to some significant support. We're trading at basically our TX is 43,445, the high 42,678. So we're trading between R3 and RXT for the week. This will update after midnight Eastern time. So we're going to see, let's see here. Yeah, we still got a couple hours to go before that update happens. But I do expect this market to come under a little bit of resistance here. 44,248 is that currently the 10 period moving average. It is dropping about $700 per week. So that number will be, in just a couple hours, be around 43.8, something like that. And so the expectation will be there'll be a substantial amount of resistance there, but we're finally blading off this intermediate momentum to the downside. And it just feels like to me that it's trying to set up a bottom. I still think there's lots of resistance overhead. There's numbers. If we were to get over the 43 number, there's plenty of resistance between 46 and 50. So there's plenty of work to be done on a weekly basis. Let's go to the daily and finish there. So daily was able, over the last couple of days since I last talked to you, we were able to get over the 21 period moving average. PPM 1 is now at a positive 1.26, so that's a big number. So we've got a uptrend underlying here, but the resistance right here at 42,390, where we're trading just above that right now, that is likely to hold. We still have a PPM of minus 0.40, so look for some consolidation here yet. But we traded right into this Fibonacci target range on the downside, down to that 32 handle that I talked about for a while. So we've satisfied most of this. PPM's all turning up, including the 200 period moving average is rising in this pattern. So there is somewhat of a pull toward going to around the 46.8 level, but there's going to be, like I said, just based on the weekly 10 and all the setup that we have here, there's going to be plenty of resistance between 44 and 46 level. And if we did print up there, I suspect we'd trade back in, still have to do some consolidation before we're going to move higher. Okay, folks, this is going to be the end of the broadcast tonight. Thanks for hanging out as usual. Make sure, and thank you for all of you that subscribed, got us over 30,000. So yeah, I'm going 40. I see someone talking about 35. I'm ready for 40. We should have been there a long time ago. But anyway, thank you so much for being part of this. Those of you in the live room, we'll see you tomorrow at 1 p.m. Eastern time. And have a great day trading. Make some money. Tell us about it on the chat line. Thanks a lot, folks.